Hi, I'm Tim Kelly, Head of Research at Montgomery Investment Management, and I'm excited to introduce the Montgomery Alpha Plus Fund. There are a couple of interesting features to the new fund, and in this video I want to outline how the fund is structured. Firstly, it's a domestic fund, so it invests in shares listed on the Australian and New Zealand stock exchanges. Secondly, it's structured as a market-neutral fund. That means that for every $100 invested in the fund, it will invest $100 buying shares that we think can increase in value, and it will also invest $100 short selling shares that we think can decrease in value. So it will have two equal-sized portfolios, one long and one short. And there are a couple of reasons why we want the fund to do that. Let's start with a quick outline of how the short selling fits in. When we buy a share for a long portfolio, we hope to buy the share at a low price and to be able to sell it later at a higher price. Short selling allows us to do the same thing, but in reverse order. In other words, we sell first and we buy later. We still want to buy at a low price and sell at a high price, but with short selling, we start by finding a share that we think is too expensive, and we choose that high price as our exit point. Once we've sold it, we're then looking for the price to fall to a level at which we're happy to buy it. It's the same concept as before, but by being able to invest in both directions like this, we can effectively double the set of opportunities that we have for stock selection. As well as giving us more opportunities to select good investments, short selling also helps us to remove a lot of the market risk associated with big swings in the stock market. Let me show you how. Let's imagine we have $100 invested in a long portfolio and think about what happens if the market rises or falls suddenly. If we choose the shares at random, we might expect that if the share market rises 20%, then our portfolio will also rise by 20%, and vice versa. If the stock market falls by 20%, we would expect our portfolio to also fall by 20%. Now let's combine that long portfolio with a short portfolio of the same value. The profit from this portfolio will be the opposite of the profit on the long portfolio. So if we invest in both the long and the short portfolios, we will end up in the same place we started, regardless of the change in the overall market. By holding both the long and short portfolios, we have effectively hedged out the market risk that you would have in a long-only portfolio. Now, that's not very helpful if you pick stocks at random, but it becomes very interesting if you're able to select the stocks that will do relatively well and the stocks that will do relatively poorly. Let's now assume that we have the ability to select stocks that outperform. If we say that we can choose a long portfolio that will rise by 5% more than the overall market or fall by 5% less than the overall market, then our profit numbers look like this. If the market rises by 20%, we might get a return of 25%, and if it falls by 20%, we might incur a loss of 15%. Our stock selection skill has improved our position by $5 in each case, so we're certainly better off. But we're still exposed to market risk, so if the market falls sharply, we expect that our portfolio will also go backwards. Now let's add in the short portfolio. If we've chosen stocks that fall by more than the market or rise by less than the market, our profits look like this. By investing in both the long and short portfolios, we've hedged out the effective market movements, and the profit is driven by our ability to select stocks. If our stock picking skill can add 5% to both the long and short portfolios, then that flows through to a $10 gain on our investment. This gives us what's called an uncorrelated return, meaning that it has little or no correlation with the direction of the overall market, and that can be very helpful as a way of diversifying your investments. So that's the Montgomery Alpha Plus Fund in a nutshell. If you'd like more information on the fund, we're here to help. We'll be providing some more detail on the fund strategy and investments over the months ahead. And in the meantime, to find out more, you can follow the links on the montinvest.com website or contact us directly.